Hello and welcome to the Capital Net TV. I'm Nandita Narayan and today we have with us Mr. Ashley Menezes. Mr. Menezes is the partner and chief operating officer at one of India's leading private equity firms, ChrysCapital. So, can you run us through your relationship and dynamics with LPs?
I think the relationship with LPs, is something that takes a long time to sort of nurture. These are global investors who know and understand the world and want to be 100% sure before they commit to a geography. So they spend a lot of time, before their investment, maybe 5-6 years, understanding the people behind the GP, and it's our job to also give them that sense. They get to see us in action. They get to see us, as we, are functioning, and they get to see that live, and accordingly, they have a better understanding of, things that we say. Is that really something that pans out over that 3-4 year period, so they can make a more informed decision about us? From our perspective, clearly, it's, private equity generally has a free hand in their ability to do things. So it's the money that we take from investors is passive. They are passive investors, and we are the active ones, can grow what we want. I think the most important thing that we've learned over time is to make sure you don't abuse that relationship. Over the last 20 years, we've taken numerous steps where we've done things that are probably detrimental to ourselves, but from fair towards investors, and I think that helps.
So, what is the general take of LPs on the Indian PE market?
India is one of the most interesting markets, from an investing environment perspective. If you're a global investor, sitting out of New York or wherever, North America or London, clearly you need to deploy that capital, and some of that capital does get deployed in the home jurisdiction. But you need to look beyond that, and they look at multiple asset classes. They could be the traditional equity, debt, and then you look at alternate assets like private equity. Clearly, India, has the demographics that make sense. So we have a very young population. Our median age is 27. There's a huge spending power, and that consumption story is sort of playing out. So the domestic market is growing. As a nation, I think clearly, everything is panning out well, and that is the interest level from foreign investors. Clearly, they have certain concerns, and as they would, there is a lot more risk in a place like India, and therefore they expect better than normal returns for taking that higher risk. I think our job, both as investors, as GPs, as well as a country, is to make sure that we have that steady, long-term, consistent sort of policies or trends which can instill in investors at least a lot more confidence to be able to continue to invest.
So I'm sure you would agree that the PE market has transitioned over the past few decades. How has the LP's point of view, or how they look at the Indian markets, PE market, how has that transitioned over the decades?
Actually, it's gotten. I mean, you have people who hitherto had not invested in India, still looking at that. I look, there have been in some instances where people have burned their fingers and lost money. And when you lose money, it's very hard to build confidence, right? There's nothing that builds confidence than making money. But I think in more cases than not, we have more new investors coming in as opposed to investors sort of going out from a private equity landscape perspective. And I think that is definitely very, very encouraging.
So ChrysCapital has had a great track record of exits. So could you please share some portfolio management strategies and success stories from your experience?
I don't think there's one mantra that sort of fits everything, right? I think we've made 80, 85 investments, 65 exits over the last 20 years. And to each of those exits, each of those investee companies is unique and different in its own way. I think our job really is to sort of, at the time of making the investment itself, work with the entrepreneur, understand the entrepreneur. Is this an entrepreneur that you want to back? Is this an entrepreneur that will be aligned with you? Because, if things go south, how is he going to handle it? Is he going to be the one who's delivering you that exit? How is he going to achieve that? So a lot of that is day one before you even make the investment, because everyone can throw out, oh, I want to go IPO. Will you go IPO? What will be your size? Have you thought of it? Are you going to sell? Who's going to sell? Do you have the infrastructure to go public? All of those things, right? So some of those things, And I think it's easy to gauge where people are just saying it for the sake of saying it, but where people have done the work and really believe. I think our role when we come in is, multifold. And we have a cell actually called Enhancing, which is portfolio value add, whose job is literally, we have 3-4 people who literally work with portfolio companies, handholding them on a bunch of issues. Some of these are things that we believe are important. Some of those things are which the entrepreneur thinks is important. So it could be simple things like, benchmarking. So we track, multiple sectors. We're very good in our research and analysis. It's very easy for us to go back to every entrepreneur and say, look, you are doing better on this parameter versus your peers. These guys are doing better on this. This is what you can do. Then there's the whole corporate governance, thing. It could be transitioning of leadership or entrepreneurs. A lot of these are family-owned businesses. How do you get more professionals in institutionalizing the organization? Everything around financing. So whether they need to take more debt or they need to raise more capital or want to go hit the public, we are experts at financial markets. So I think that's, again, we play a big role. It's easy for us when we do our diligence before getting in to understand where the gaps are. And again, part of the conversation day one is the alignment in his understanding or her understanding of what those gaps are. And if there isn't, then clearly, it's a different sort of, path that you need to follow. With private equity investors coming in, it adds a lot more credibility to the organization as well. So they are able to attract a lot more people, saying that, look, this is a PE-backed company. It is on a growth path. It is, likely to deliver an IPO. I, as a professional, will be more open to working with this entrepreneur. So it's a whole bunch of things. We may do some of it ourselves. In some cases, we actually hire firms who are expert who can come and do it, to come and do that study or do that project with the entrepreneur and sort of get him to or transform that.